Major U.S. stock market indexes appear to be moving in an upwards fashion as we near the end of 2024. Today we are to discuss Intel's recent troubles and the upcoming U.S. employment data on Friday. For a rounder view, we are to conclude the report with a technical analysis of S&P 500's daily chart. Intel has ousted its CEO Pat Gelsinger after the board lost confidence in the CEO's plans to turn around the troubled chipmaker, according to a report by Bloomberg. The decision, according to the aforementioned report, was made when Gelsinger met with the board to discuss the company's progress on winning back market share and narrowing the gap with NVIDIA, which appears to have left the board unsatisfied, which in turn resulted in his resignation. Nonetheless, the company now faces a difficult choice as the search for a new CEO who would be facing a significant challenge ahead, just like their predecessor. Overall, the market reaction to Gelsinger stepping down appears to have weighed on the company's stock price, and thus should the company's CEO pick fail to satisfy investors, it could further weigh on Intel's stock price. Whereas should the company appoint a CEO which inspires confidence to investors, it may have the opposite effect. Yet we should note that the search for a CEO has just begun, and with the numerous names being floated around as potential successors, it may be difficult to gauge the impact of each candidate on the stock price until the list has narrowed down. In conclusion, our view is that Intel requires a CEO who has the technical know-how and industry credibility to lead the chip maker to greener pastures. The U.S. employment data for November is set to be released this Friday, and as always, the NFP and unemployment rate may take center stage. The expectations by economists are for the non-farm payroll figure to come in at 202K, vastly exceeding last month's disappointing figure of 12K, and for the unemployment rate to tick up to 4.2% from 4.1%. Setting aside the NFP figure, the expected uptick in the unemployment rate may amplify calls for the Fed to cut interest rates in their last meeting of the year, as it may imply a loosening labor market. Yet we would like to stress that a mere of 0.1% uptick in the unemployment rate does not necessitate a collapse of the U.S. labor market. However, should the unemployment rate come in as expected, it may aid U.S. equities markets under the guise of a more dovish Fed, which in turn may further ease the financial conditions surrounding the U.S. economy. On the other hand, should the unemployment rate come in lower than expected, implying a resilient labor market, it may heighten worries about the Fed maintaining interest rates at their current levels for a prolonged period of time, which in turn could weigh on U.S. equities market. Overall, the final employment data for the year may set the tone heading into next year, and thus any deviations in their positive or negative implications on the U.S. equities markets may be amplified by market participants. For U.S. equities, the U.S. 500 index continues to form a new all-time highs and appears to be moving in an upwards fashion as we near the end of 2024. We opt for a bullish outlook for the index, and supporting our case is the RSI indicator, which currently registers a figure just shy of 70, implying a strong bullish market sentiment in addition to the upwards moving trend line, which was incepted on the 4th of November. For our bullish outlook to continue, we would require a clear break above the potential 6,100 resistance level, with the next possible target for the bulls being the 6,250 resistance line. On the flip side, for a bearish outlook, we would require a clear break below the 6,030 support level, in addition to a clean break below our aforementioned upwards moving trend line, with the next possible target for the bears being the 5,885 support line. Lastly, the case for a sideways bias is impractical, as our S1 support level and the R1 resistance line are fairly close to one another. Nonetheless, for a sideways bias, we would require the index to remain confined between the 6,030 support line and the 6,100 possible resistance line. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.